Sticking with earnings, Educomp is up next. Shantanu Prakash, Managing Director and CEO of Educomp, has joined in. Shantanu, morning. Thanks for joining in. Let's start with the ADR issue. Can you take us through how much of this $250 million approval do you actually go on to raise, and why do you need to raise this equity capital?
Well, good question. At the moment, it is only an enabling resolution, and as you know that this resolution is part of our entire FCCB restructuring exercise. We have an FCCB that is coming due on July 2012. So we have gone ahead proactively and taken shareholders' approval for restructuring the FCCB, and if possible raising some additional capital. From Educomp's perspective, our cash reserves are very healthy, but we also see innumerable opportunities to invest in India's increasing education economy. Also, one of our objectives would be to expose the India education story via our stock, of course, to a much larger pool of investors than has been possible to do so far. And potentially an American listing is going to enable us to do that.
Shantanu, morning. So the preferred instrument will be an ADR. You won't look at any domestic instrument in order to raise that money?
Well, all options are on the table right now, and I think it's really too premature to be able to really comment on any of these things at the moment.
Okay, let's talk a little bit about your guidance then, where you say you see FY12 sales at 1760 crores. Just line out what you expect to see from the Smart Class performance in specific in order to aid that guidance.
Well, Smart Class is our flagship product, and Smart Class has done extremely well over the past several years, and we expect that the trend is going to continue in FY12 as well. And we have guided for doing between 40 to 45,000 classrooms in Smart Class, which essentially means an increase of between 47 and over 60% compared to the numbers in FY11. So that is clearly leading the way as far as Educomp is concerned, and that's going to be a significant part of our guidance. However, having said that, all the other verticals that Educomp today has leadership position in, whether it be vocational, whether it be K through 12 schools, whether it be our preschool business, all of the verticals are performing very well. And if you look at the numbers for FY11, you will see that the sales in a number of our other downstream subsidiaries have increased significantly. In many of them, they have increased over 300% over the past year.
Just one quick question on this ADR issue. You have FCCBs of $78–79 million. Do you intend to repay all of that and still keep some kind of cushion for growth in terms of growth capital?
Well, that is actually the idea, and it's getting due in about a year's time. So that would be the plan. That is right.
On top of the kind of growth that you spoke about for Smart Class, can you just take us through what kind of margin profile you expect in this year, FY12, for the Smart Class business? Because that has reported a good 58% number in the current quarter.
That is true, and we believe that as we go forward and expand the base in schools in India, that margin is not only preserved, it also has the potential to grow. For instance, our cost of content development is amortized increasingly over a larger number of schools. Our sales force is getting more and more productive, and what is more significant is the fact that our buying power for the equipment that we installed in schools is unprecedented, and all of this yields economies of scale. So going forward, I think the Smart Class margin is going to be maintained, if not expanded.
What kind of yields are you getting on the Smart Class product right now, Shantanu, especially because I think you've also launched a hybrid version of it?
Actually, this quarter we announced a brand new Smart Class product which we believe is very innovative. It's very path-breaking, and it's called the Digital Teaching System. And I'm not going to explain what it does. The details are available on our website, but it significantly increases the bar in terms of product innovation and product quality, and from a user experience perspective, from whatever is available in the market, not just in India but across the world. Coming very quickly to margins, Smart Class is a 58% margin product, and going forward it should be in the range of 58 to 60% as well.
I believe you have guided that you're going to expect some small amounts of money from stake sales in strategic investments. Can you take us through what you had in mind for the 65-70 crores which might kick in?
Well, Educomp has been investing proactively, I would say ahead of the curve compared to anybody else. So we saw internet coming into a big way, and we invested in a large number of companies that today have grown to very significant size. And we believe that increasingly going forward, we will have opportunities coming our way where we can monetize some of the investments that we have made, especially in the internet space, especially in the high intellectual property content development space. So that number that you see is really coming from our monetizing some of our strategic investments in some of these spaces.
Thanks, Shantanu. Good luck for FY12. Thanks for joining in today. That's Educomp. The stock is flat today, but numbers were pretty okay, and their guidance has been pretty robust as well. We'll